Good morning, everybody, and welcome to Windsor Brokers live daily market outlook for Wednesday, 20th of February 2012. Highlights for today come as follows. The euro remains well supported following yesterday's jump above recent range top at 134 that kept the price action limited for past couple of sessions. After a great performance of German and European zoo report that came in much better than expected release, made up some ground for the Eurozone economy for possible stronger recovery that basically boosted the single currency that is currently still holding above 134, but still unable to clear the initial barrier at 134. However, we are looking now for some fresh bullish resumption following yesterday's break and close above 134. That is a supportive element for now. A lot of work still ahead for the single currency, as we need to see a break above 135 in order to confirm the breakout and the base at 133.00, where that was signaled by double doji seen on Friday and Monday. Sterling remains under heavy pressure. Fresh low posted at 154.13, approaching our targets at 154, 153.90, and overall negative tone doesn't see much at this point for much chances for any stronger, more significant corrective action. More of this, of course, we'll elaborate later in the technical part. The yen continues to strengthen against the US dollar following repeated upside failures at 94.40, 94.20. Now more pressure seen towards the downside with the Bank of Japan members commenting that yen the yen fall helping exports. Dollar Swiss lost traction yesterday following a failure to sustain breaks above 92.50, but still regaining 92 handle that was initially lost. Might see some hopes for some stronger recovery. On the other side, crude oil is slightly higher compared to the recent losses that dipped as low as 95.74. We are currently at about $97 per barrel. The other thing that is pressuring the oil price is announcement of Saudi Arabia expecting to raise its output in the second quarter to satisfy the higher demand from China and drive economic recovery elsewhere. Now, this is bearish a signal for the crude oil as the increase of the output comes in the lower season where there is a lower demand for the crude oil. That pressed basically the Brent oil towards $117 per barrel. Crude oil, as said, U.S. crude oil holds positive near-term tone of recent lows at 95.70 zone, holding currently at 97, but overall is still within the range of 95.00 and the 98.00, still consolidating the recent strong gains with some signal basically required to break above or below this range. A number of other instruments are also such as dollar yen entrenched within the certain ranges and requiring a break of either side to define the fresh direction. From the other commodities, gold remains under heavy pressure, just slightly above 1600. That was tested again yesterday. That is showing that initial pressure is still in play, and the risk of downside risk of losing 1600 psychological support and handle seen as quite high for possible bearish resumption down towards critical supports at 1520, 1530 zone. A break below 1600 also to signal completion of the near-term bearish flag-like consolidation that will end on a break below 1600 and open way down towards critical supports at this 1530, 1520 zone. And from the calendar today, already released all industries activities in Japan for December 1.8 is released compared to 1.6 forecast, and the negative minus 0.3% in November. German PPI came in higher than expected, 0.8 today's release for month of January compared to 0.4 forecast, and the minus 0.3 release of December 2012. Final CPI inflation for January in Germany dipped by 0.5% as expected, staying at the same level from December 2012. French CPI also dipped by 0.5% compared to 0.2% contraction forecasted, and plus 0.3% in December. Data that come from UK at 9:30 GMT are basically the highlights of the day. MPC meeting minutes from Bank of England are expected to show no change from the previous voting of the members of the MPC. Unemployment rate is also expected to stay unchanged at 7.7%. Claimant count change is expected to drop to minus 5.3 thousand compared to minus 12.1 thousand in the month of December of 2012, and average earnings for December are expected slightly to dip 1.4% is forecast compared to 1.5% in the month of November 2012, and the zoo economic expectations for February from Switzerland is due at 10 o'clock GMT. We don't have forecast. Minus 6.9 is the previous release, and then that will be all from Europe. And then the data from US kick at 1330. Producer price index for January plus 0.3% forecast compared to minus 0.2% in December. Core PPI is expected at 0.2% compared to 0.1% in December. Housing starts are expected to dip slightly to 930,000 units started in January compared to 950,000 in December. And the building permits, for some reason, we do not have the figures. We're going to take a look. Building permits are expected are forecasted at 0.90 to 920,000 in the month of January compared to 910,000 in the month of December 2012. And basically that is all for today's calendar. We're going to take a look now at technicals and see what we can expect on today's trading for the major currencies and commodities. As I said, the euro picked up some momentum on yesterday's break above important 94 barrier. That also marked near-term range and consolidation top with the bulls, as we can see on the ADX chart on the 1 and 4 hour. The bulls are now coming into control after breaking above this congestion 93.94, with the reversal being signaled initially by double doji seen on Monday and last Friday and Monday, and now we're developing the reversal pattern. Of course, still far from confirmation, but initial signal has been given as the price recovered nearly 61.8% of the latest downleg from 135.18 to 133.05. This is at 134.37. The price reached so far 134.33. Also important is the daily 4-hour Ichimoku cloud base at 130. I do apologize. At 134.40. This is that reinforces the 134.37 barrier. We have the quite strong resistance at this point. As we can see, the market already tried twice at these levels, unsuccessful so far. So this is our initial barrier break, of which is to open more significant 135 we have 76.4% retracement to 134.68, but our key barriers are at 135 zone, where we have the 50% retracement of the entire down leg from 137.10 to 133.05, and also there is a lower top of 13th of February at 135.18. We are looking for a break above these levels in order to confirm the recovery and confirm the near-term base at 133.05. That would allow for a stronger recovery and prevent the pair from further sliding as a part of reversal from recent peak at 137.10. So focus is still at the upside. 1 hour key barrier at 135.00, 135.20, let's say, break of which is to confirm the near-term base. 4 hour indicators are now breaking above the midlines. That is seen as supportive for the current action, but initial break at 134.40 needs to be cleared in order to confirm. Any failure, it's important to mention also any failure under 135.18, which is the recent lower top, the latest lower top posted on 13th of February, could still risk bearish resumption, as we're still in the down move from 137.10 with the basing attempt seen here at 133.00 following several attempts lower. Now this is initially positive signal as the structure on the near term studies is turning positive, and the price is now holding above 20 and the 55 days exponential moving averages on the 4-hour chart. On the hourly, a bit extended conditions are causing current congestion at this point. As we can see, the RSI is now out of the overbought territory, while MACD is still quite extended, and the initial drop in the momentum, loss of momentum on the hourly chart could prolong current congestion between 134, approximately 134.05 and 134.33 recent peak. But overall picture is still positive, and we're still looking for a possible break above 134.40 and of course test of our key barrier at 135 zone. We have a question. What is the name of the green line in the chart table? If you mean this line, this is a 55 days exponential moving average. I don't see any other green line unless I'm missing it. So just confirm to me, is this the one that I'm pointing now, which is a green line currently at 133.76? Okay, I will wait for your answer. Meantime, we will continue the session. British pound, as I said at the beginning, is quite pressured. The bears remain fully in play, continues to trend lower. Fresh low posted last night at 154.13, close to the end of the yesterday's session, and then brief consolidative action up to 154.50 was all seen so far. Hourly bears are in play with the basically the more neutral tone now seen on the 4-hour ADX, while daily bearish structure is firmly in play, and this is seeing risk of resumption further extension of the larger bear trend and descent from 163.80 peak of 2nd of January 2013, and also the annual peak. Despite the quite extended conditions on the daily chart, we still see room for further extension lower. We are now looking for test of 154.00 psychological and 153.92. This is the low of July 2012. Ahead of more significant targets at 152.67, 152.33. We are repeating the things from the previous session, as this is basically our near-term target. After the pair, as shown on the weekly chart, made a larger double top on the peaks of September 2012 and January 2013, showing the completing the double top formation and the opening away that was accelerated on the loss of main bull trend line at approximately 157 zone. This is the bull trend line of 135.01 2009 low, and we are looking for test of this is the medium term range bottom. We have several levels slightly ahead, around 153 and then 152. 67, 152.71 and 152.33, and this is our near-term target. Of course, some corrective action cannot be ruled out, but we have initial strong barrier at approximately 155. This is the peak of yesterday's high, and this is our initial resistance. Anything above this level would signal pause in the current bears, but on the upside we need to see the break above 156, 156.30. This is the previous these are the previous lows of beginning of February, and also marking 50% retracement of the down leg from 158.43 to so far 154.13, and basically clear break above 156, 156.30 is to signal some stronger corrective action. Otherwise, anything below initial 155 would be seen just as a mild correction, and preceding a fresh bears towards 154, 153.90 initially, and then 152.67 and 152.33. Dollar yen, as we can see on the 4-hour chart, is still entrenched within the range, still in the neutral mode, and still directionless, lacking any signal that would give the fresh direction after peaking at 94.45 on the 11th of February 2013. Subsequent reversal was again contained at 92. This is our near-term base and quite strong support. This is also the 38.2% retracement of the latest up leg from 88.05 to 94.45, and this is offering good support for now, and the base and seen as a trigger break of trigger for a possible stronger recovery in case of break lower on the upside. Again, recent attempt seen 2 days ago at towards 94.40-45 that stalled at 92.21, pardon, 94.21, shows that the upside is also well protected, and we are within the range. And no much changes from yesterday, as the price action is currently around 50% midpoint of the recent range, around 93.30, where the price is currently. As we can see, it's exactly 50% retracement, and it's half of the halfway between 92.00 and 94.45. Directionless trading, and the neutral near-term studies see the break of either side as a trigger for a fresh direction. Now on the daily, risk is still seen as the indicators on the daily chart are now reversing. RSI is already out of the overbought territory. MACD is pointing lower. Basically all indicators are pointing lower, and this could be initial signal for some corrective action. Of course, the trigger seen on a break below 92.00 as initial signal. Break and close below this level would give possibly fresh direction and trigger some stronger corrective action that is seen lacking since the pair started its strong rally in September 2012 from 77.12. We can see that it's quite a strong move on the weekly chart. There is basically no breaks, while daily is showing some mild corrections, while current congestion is again signaling that signaling possibility of some stronger corrective action. On the upside, conversely, any break above 94.45 is set to open our next upside target. That is still value and still in play, as underlying bulls are still unobstructed. It's a 94.97 peak of May 2012, seen as the next upside target of the strong recovery from all-time low at 75.55 posted in October 2012, and the recent rally that commenced from September 2012 low at 77.12. And finally, dollar Swiss from the major currencies set the near-term bulls are losing traction following upside rejection at 92.56. Yesterday we mentioned that we need to see the clear break above this level in order to resume the a steady recovery from 92.20 that goes in the phases. When it reaches certain level, then consolidates. So we have the third consolidation that so far failed to resume gains, dipping also below the 92.00 level as our initial support and range floor. As we can see on the ADX chart, on the 4-hour studies, the bears are taking control now. Similar is with the hourly chart, while daily bulls are running out of steam, and this is quite indicative for the future near-term movements. As the price cracks 4-hour 55 days exponential moving average that is currently moving in the sideways and reversing 20 days one towards the downside, see a possible risk of further extension lower. Levels to watch from Fibonacci on current movements. 23.6% of the entire 90-20, 93.256 has been cracked. We have 91.66, 38.2%, and 91.50, which is the previous range floor, and more significant is 91.38, 50% retracement. Basically, loss of 91.50, 40 would be quite risky, as this will reintroduce bears, bring bears fully in play and focus downside levels. Conversely, holding above 22, regain of 92.00 as current price action is attempting to do, would still keep hopes of a possible recovery, but again, break above 92.56 is the minimum requirement in order to signal the bullish resumption and open our next target at 93.00. That is a 76.4% retracement of the down leg from 93.87 to 90.20 low of 1st of February 2013. This barrier at 93 is also equivalent to the daily Ichimoku cloud top at 90, currently at 92.94. So we have quite a strong barrier at 93. This is also a psychological level. A break of 93.00 is likely to confirm a strong bullish presence and open our key barriers on the upside, which are 93.87 and 93.81, break of which is to confirm the base and the open way for a stronger recovery that will refocus 94.35 200 days moving average. Crude oil, as I said at the beginning, there again some strength in the near term. We're still positive as shown on the hourly chart, following bounce of 95.70 where the near-term basic attempt is evident, but still lacking momentum as shown on the larger picture. 4-hour indicators are still in the negative territory, lacking momentum for a fresh stretch towards the upper targets at 98 zone, 98.22, 98.63. This is the recent peak of 13th of February. As a dip from 98.63 retraced over 76.4%, again failing to test initial strong support in the near-term range floor at 95.00. This suggests that the oil price is still entrenched within the recently established range at 95.00 on the downside and then 98.63 on the upside. Initially it was at 98.22. Now brief break higher, still did not manage to materialize gains and extend towards 99 next target. Again, the similar situation like dollar yen, we need to see the break of either side of the range to confirm the either resumption of the larger uptrend from 85.20 or possible on a break above 98.63 or possible stronger corrective action on a break downside, break below 95.00 base, where we'll be looking for test of 94.68, which is the high of the 10th of January, and 93.83 2nd of January high, and 93.50, 38.2% Fibonacci retracement of the entire move from 85.20 to 98.63. Recall of the comments from Saudi Arabia about increasing the production, as well as today's, tomorrow's U.S. crude inventories that are, according to expectations, seen again increasing the stocks of the oil in the United States. That could be another bearish element for the oil price, and could pressure the price again lower for a possible test of recent higher base at 95.70 and the near-term base at 95.00 and near-term base at the break point at 95.00. And that's all from my side. Now it's your turn with the questions. Just to make it clear, I didn't get, okay, we have already a question, the green line. The question about from which point we can see that the market is raising, you have to specify the instrument first of all, and then we can discuss it. Usually there are points, supports and resistances. In this case we are talking about resistances. There are various points that we are looking for, including the technical tools, previous highs, trend lines, lows. I mean, there are a number of things to watch, and of course there are break points. So you have to specify an instrument that we can focus on, and I can show you on the chart how it works. I think you can see it from my presentations. I'm trying to be very detailed in the things and show the very important levels that could be also seen as the trading signals, that we are not giving any trading advice, but based on the technicals, you can always find your best entry and exit points. Now you need to tell me the exact instrument you are looking for, and then we can discuss it, we can elaborate it further. I don't have an answer from you, so I cannot give you the exact answer, but what I said, there are a number of points we are watching. For example, just to go back to the oil chart, that was the last one. If you want to see where the market is going to increase, as you said, resume. Let's say if we are in uptrend like crude oil. Now the recent peak at 98.63 is seen as a break point, as this is consolidation congestion here between 95 and 98.63. Break above 98.63 is the simplest way, is signaling resumption of the trend. Of course, it has to be clear break, let's say close, daily close above this level, or weekly close, which is even more significant, will signal further resumption of the trend. Conversely, of course, break below the consolidation floor would signal further correction. We are now in I would rather describe it as consolidation than correction, because we have the downside limit, and this holds firmly. So anything below 95, again, a clear break and a possible close below will be initial signal for some stronger movement on the opposite direction towards the downside. But on the upside, as I said, break above 98.63 is the initial signal for resumption. Of course, you have to consider a number of technical tools, their performance and behavior, and whether they are pointing higher or pointing lower, and this is how we generate our trading signals and define the trend and direction for every instrument. Okay, is there any other question for today, or we can conclude today's session? Okay, it seems that this is all for today. In that case, I would like to thank you all for being with us. I'm glad that I explained something. Again, to repeat, any questions, any suggestions, anything that you would like to clear, you can send me an email on the address that you can see here, analysis@windsbrokersltd.com. Also, someone who asked about the templates for the charts, again, the same thing. I need your email address. Once you send it, I will forward to you, so we will be looking at the same chart configuration. Our next session is tomorrow morning at the same time at 8 o'clock GMT. And okay, there is another question. If the market is not stable, how do you know? Now, I don't know what do you mean by a stable market, but usually we have two ways of movement. Either it's a trend or range. In this case, if we take a look on the bigger picture, as you can see on the crude oil, from 85.20, this is clear trend, uptrend. Now, if we take this period from end of January, beginning of February until now, we have range. Basically, the larger picture, the trend is still up and will be up as long as 95.00 as the basic and initial good support stays intact, stay protecting the downside. However, the resumption of the uptrend will be seen on the break above 98.63. Currently, if we take the smaller picture, then we will we'll see that we are still in the range and we have no direction, up and down, but it's still limited within a certain levels that are capping the upside and protecting the downside. So this is the range, as long as you can define it also. If you put the trend line, horizontal line here and a line here, so we have the range. And break of either side will signal the new trend. Now, break of the upside is resumption of the larger uptrend. Break of the downside is initial signal of the downtrend. As we also have the initial points for the double top, 98.22, 98.63. A bearish resumption on the break below 95.00 would be initial signal of double top. That is again a bearish pattern, and they will be signaling a stronger reversal. And of course, the trend will be also you define by the trend line. That's very simple, or you can do it this way. Let's say, so we are still in the uptrend. The trend is still, the trend line is still intact, hasn't been broken by any move against. We are still in the uptrend. Now, if we take, let's say, the downside movements, better seen here, then we can see, let's say, that the shorter term downtrend has been cracked, as we have the downtrend line from 98.63 through 98.26 and the 98.03. This is valid trend line, has more than 2 points that is touching. With 2 points only is the tentative one. Now, break above this trend line is showing initial attempt of reversing, changing the current trend. That will be also seen, confirmed by Fibonacci studies, as if we take the recent down move from 98.63 to 95.76, we're approximately at 50%. So we have the break point exactly there, trend line resistance and 50% retracement. Anything above this will be signaling a change of the near-term trend. When you use the lines are usually the trend line. The lines are drawn to define the trend or certain limits. As I told you, as I just showed you, if you use the line, let's say, to define the downtrend, or you use the line to define the uptrend. So these are the trend lines. Any break below the trend lines is initial signal of changing the trend. Also, you can use the channel lines. For example, if we take the linear regression, then we have a channel, and we can see that the crude oil is still in the uptrend, holding within the channel. Now the channel held the recent dips so far, and still holding the upside in focus. We can also draw the channel by simple trend lines. Okay, it has to be parallel. It's approximately parallel at this point. So we are still defining the uptrend by the trend lines. And you can see this is the main point of the lines, or you can use the horizontal lines to see the barriers or downside limits. I would suggest if you go to our website in the members area, you will find a whole tutorial about technical analysis, chapter by chapter, designed especially for designed for different type of traders. You have the a part for the beginners and the part for advanced traders, where you can find all explanations and everything in details. Of course, I'm here to help at any time. You can send me an email and we can discuss any point that you are looking for. Of course, during the sessions also, when you send a question, I'm always willing to answer and assist in any issue that appears. And it seems that we exhausted our questions for today. Again, thank you all for being with us. We were a bit longer today due to some more questions. Expect to see you back tomorrow morning at the same time at 8 o'clock GMT, 10 o'clock local Cyprus time. Wish you a nice Wednesday, and of course the most important thing, very successful and profitable trading. Follow the golden rule: trend is your friend. As long as you hold with the trend, you have the great opportunity to make your profits. Until tomorrow, I wish you a nice day. Good luck.